we lost all of it. It was a serious moment in my life. We built a couple thousand homes in that period. In 2008, we looked around us and said, hey, where did the buyers go? Adversity is a great teacher. When there's no other route but success, it's funny, you succeed. You have no choice. I started selling real estate by necessity, not my first option.
Where should they start, and what would you say to them if they came to you?
Right, run. So real estate is absolutely a wonderful way to build wealth, generational wealth. Understanding how real estate works really provides a leg up in financial security. It doesn't happen overnight. Great choice. There's plenty of realtors out there, and all of them have more experience than you if you're a newcomer. So how do you do it? The best advice I have. The other thing that's so helpful when you're a new agent is it's invaluable. If you are a newcomer to the business and you don't have any experience, you don't have a lot of contacts, it's going to be very hard for you to, right? And that, one of the best things you can do as a new agent, it really sharpens your skill set on how to sell. It's absolutely people first, number second. Real estate is an emotional business, is elemental in being successful.
It's a time, it's a process, so be cautious. Don't go out there, buy the Lambo straight away. You gotta wait until things come in.
Precisely, maybe buy the used one. In real estate, when you meet somebody new or you're introduced to somebody new, they're a seed. You don't know when they're going to germinate. So you're planting seeds, you're not sure quite when they're going to germinate.
What are the good qualities you're looking for a good client?
Before you can really look in earnest, it's very important to get a mortgage pre-qualification letter. You don't want to go too high and stretch unreasonably in your budget. You also don't want to go too low because you're going to end up looking at properties that are maybe not as nice as what you could afford reasonably. How do I know that I'm working with somebody who's motivated and earnest? Those are some of the things that I know if a buyer is willing to do, they're worth my time.
What do you look for yourself when you're buying a property for investment?
Oh, this is a fun one. Real estate investing, it absolutely builds generational wealth. Investing in real estate pays you in so many different ways to be financially secure. The neat thing about investing in real estate, and I would say this parallels being a real estate agent also, people approach it very differently. You can be a successful investor. And I'd say that if you're itching to kind of get started, that's like sort of the first step. The other advice I would give with investing is beware of, oh my goodness, yeah, and bankruptcy haunts you. It doesn't go away easily. Eventually, it goes away, but it really puts your life on pause for a while. And right, the Grant Cardones of the world have gotten there because they started small. And they bought a couple duplexes, and they bought maybe a fourplex, and then they tried their hand at a 6-unit building, and then they stubbed their toe and they made a mistake, and they regrouped from that. And they said, okay, but if you're good at it, you can keep expanding. And next thing you know, you're looking at a 40-unit building or a 75-unit building, and you can really scale up. But everybody starts this way. They all start modestly.
What are some things, Tom, that you're seeing now, and what are some things that you're looking out for in the real estate market going forward?
Two thoughts. The first is,
conducting millions of dollars worth of real estate transactions, Tom Dilsheimer is one of the founders of the How Group, a real estate investor and a real estate agent, specializing in the tri-state area. So that's Pennsylvania, New Jersey, and Delaware, with particular emphasis on the residential real estate market in Philadelphia and its greater area, especially the affluent, leafy suburbs of the main line. He is extremely active as a highly successful real estate agent. And let me tell you, few people have as strong a feel for the pulse of the market than Tom. And today, we're going to hear more from Tom about himself, but also about real estate in general and investing, along with his thoughts as a prodigious realtor. So once again, Tom, thank you so much for joining us here. And for those that don't know you, could you just provide a brief background? Like, I know that your father was in real estate. You might have spent some time studying the arts, but how did you first get started and first catch the real estate bug, if you will?
thanks, Michael, for the kind introduction. Really, I'm humbled and grateful. Um, so real estate has always been around the kitchen table, so to speak. When I was growing up, my father and my uncle were builders and developers. They built single family homes in the suburbs. And I grew up in the Philadelphia suburbs. And as a young child, I just had a natural curiosity about the blueprints that were on the table, and I learned to read them and understand them because that was kind of fun. I would go out with my dad on Saturdays looking at pieces of ground, and he'd give me advice on why one parcel of land would be better to be developed than another. And I just I always had a hand in it. When I was 12, I was picking up trash on job sites for spare change. And that led to, when I was a teenager, sweeping out houses and working on job sites over the summers. Um, to then, as soon as I graduated college, I was assisting the marketing director in our family development business. And from there, I rose to superintendent on a job site, and running the marketing department, to then being involved in sales and entitlements, meaning seeing pieces of ground and how they could be developed, to eventually being a senior VP with a firm. We were active. I was active there for, my gosh, 18 years full time. We built a couple thousand homes in that period, and I thought that that would be my, the end of that. That would just be my career straight away. But as fate would have it, the Great Recession interceded, and in 2008, we looked around us and said, "Hey, where'd the buyers go? They're not here." At this point, we'd expanded to North Carolina. We had land holdings in Florida. We were active in the Delaware Valley, Pennsylvania, Delaware, and New Jersey. We had a lot of inventory. We had a lot of home building lots. We had a lot of options on land deals, and we lost all of it. It was very it was a serious moment in my life, and I had a nice house, and a wife and children, and a great job, and the great job part fell through. And now what do we do? Um, and the Great Recession, which really was from maybe 2008 to 2011 or 12, was very challenging. Banks stopped lending, and the real estate market was basically in irons for several years, and had a serious recalibration. Um, I was fortunate enough to already have had a real estate license, which I acquired in 1994, and I put that to good use. I started selling real estate by necessity, not my first option, but I found that I was good at it. I certainly knew how a home was built from my construction days. I was good with people. I certainly knew the area, and it kind of came easy, I suppose, because I already had a lot of the tools necessary to become a good agent. And one deal led to three, which led to more than that. I became a pretty successful producer fairly quickly. My current partners asked me to start a brokerage with them, as they were builders and developers and property managers, and the one sort of missing piece for their vertically integrated real estate company was a brokerage. So I accepted the invitation, and we started the Howe Group Real Estate, grew that to 25 agents, and we're quite happy being an independent. But then we saw the market starting to shift in the brokerage market, and realized how important it was to have a larger platform through which to sell and market properties. Meaning, uh, we just didn't have the deep pockets that some of the national brands did in terms of marketing properties, recruiting agents, and really running at optimal professional speed. And so we made a decision to merge. Oh, pardon me. We made a decision to merge with an existing brokerage. And after surveying the market, we found Compass Real Estate, which was a fairly new company at the time, to be an ideal fit. And so we brought our team over to Compass, and now we're one of the larger Compass teams in the Philadelphia area. And our handle is the Hal Group, and we're all licensed under the Compass umbrella, which is the largest brokerage in the country with over 30,000 real estate agents coast to coast, not franchised, just one umbrella. and they've been a wonderful partner with us, and I'm proud to be a Compass agent. And there it sits, and that's where I am today.
Wow, Tom, I mean, that was, in terms of your apprenticeship, it sounds like an excellent youthful apprenticeship. But talk about, learning from a crisis like the Great Recession, your once in 50 or once in 100 year kind of recession. Wow, that was, but, I think what's encouraging for everyone to hear is just how much you improved afterwards. It may have taken a little while, but you've come on leaps and bounds at this point. So, congrats on all that. I think you learn a lot. I think we learn a lot from life in these issues as well.
Adversity is a great teacher. It really forces you to reevaluate and get to the kernel of what's important and how to get there. And when there's no other route but success, it's funny, you succeed. You have no choice, and I'm just one of millions of people who face adversity and figure it out and keep moving forward.
Perfect. So let's just switch gear a little bit, Tom, now. And just, I think that, some people could benefit, obviously, from your advice of that experience. So perhaps let's just imagine that there are three people for argument's sake. And let's just start with person one. So let's assume that you're speaking to someone who they've heard that real estate is good for building wealth, but they're completely new. Like maybe they want to buy their first house to live in as an owner occupier, but they know little to nothing about real estate. So where should they start, and what would you say to them if they came to you brand new?
Right. Run. No. So real estate is absolutely a wonderful way to build wealth, generational wealth. Whether as a real estate agent or through investing, we can talk about that in a bit. But understanding how real estate works really provides a leg up in financial security. Um, and selling real estate is a long term process. It doesn't happen overnight, and it doesn't happen quickly, meaning it takes time to find the right client, who wants to work with you. It takes time for them to understand what they want to buy, or if you're listing their property, how you're going to successfully sell it. And then it takes time to go through the actual motions of either A, finding the property, or B, selling it. And then even once you have it under contract, there's still, the typical time from contract to close is 6 weeks. It's still another 6 weeks before you get paid. And by the way, you don't get paid unless there's a successful closing. So you could do all of these steps, and then the buyer can't get financing, or for some other reason the deal collapses, you got to start over. So what would I say to somebody who wants to come into the business fresh? I would say that a great choice, because you're going to be able to do this career for many, many years. B, start out with a team of seasoned real estate agents that are able to help you learn the ropes, for one, because none of it is rocket science, but there are a myriad small steps that you must do successfully in order to earn a paycheck in real estate. And if you louse up one or two of them, you're done. So you have to do it correctly. Again, none of it's really challenging, but it takes some finesse and a little bit of practice. And finding clients in of themselves is an art and a challenge. Uh, there's plenty of realtors out there, and all of them have more experience than you if you're a newcomer. So how do you do it? The best advice I have is to start with a team that is already in production, that already is generating leads for themselves. They will share leads with you as a newcomer. Granted, you will not earn as much as if you were able to generate those leads on your own, because you're giving them a piece of your commission for the privilege of getting the leads to begin with. But you will get counsel on how to work with those individuals, if it's listing at their house or if it's helping them buy a house. You'll have people that you can speak with and say, hey, how do I do this process or this step in the transaction? Or, how do I help my client search for a home? Basic things. When you're with an experienced team, they can provide you that feedback on a daily basis. So you absolutely have to start with a seasoned group and get leads from them. The other thing that's so helpful when you're a new agent is sitting in an open house. An open house is when you've listed a property and you let people You have it open to the public for an hour or two on a weekend, and you let people peruse through. Open houses are a great way to practice sales skills and to understand what the market is doing by talking to actual buyers in the market who want to buy. It puts you at the intersection of where transactions are happening. And so when you are at an open house, you're able to pick up clients, you're able to practice and hone your skills as a real estate professional, and you're really able to see in real time what the market is doing. It's invaluable. If you are a newcomer to the business and you don't have any experience, you don't have a lot of contacts, it's going to be very hard for you to sit in open house, right? And that, one of the best things you can do as a new agent is sit in open house because it really sharpens your skill set on how to sell. So when you're with an experienced group, if you join in with an experienced team, you get a real leg up on the opportunity to sit open houses, the opportunity to get leads, the ability to speak with professionals in that group about how you should best navigate all of the twists and turns of the real estate process. So don't go it alone. Go with some people who know what they're doing. That would be my best advice.
Very good, very good. It seems like, in a sense, you build people. Real estate is not just numbers; it's all about people as well. Building a
Oh,
team.
it's absolutely people first, number second. Believe me, the numbers are important, but real estate is an emotional business. And understanding how that works and how a real estate professional fits in that process is elemental in being successful.
And also, what I heard there at the beginning, you're saying is it's a time, it's a process. So be cautious. Don't go out there buy the Lambo straight away. You got to wait until things come in.
Precisely. Maybe by the used one. Yeah. I like to say that in real estate, when you meet somebody new or you're introduced to somebody new, they're a seed. You don't know when they're going to germinate. It could be that they're ready to go and the stars align and they need a house immediately because they're getting transferred into the area and they're starting next week. It could be that that person, they're not going to be ready for their next real estate journey for another year, or it could be 3 years. I've worked with clients where it's been 3 years until they buy a house for any number of reasons. So you're planting seeds. You're not sure quite when they're going to germinate. Um, and when you do that, and you got bills to pay every month, it's very hard to start on your own and grow your network organically, or even any other way, and get traction in this business quickly. Takes time to build up. Another important reason to be with the team.
Very good. In a sense, you kind of think about it like these people that your clients are, you're really trying to figure out as well, like what makes a good client. Because some people who are new, they're wondering, should they go to open houses? And you've kind of answered that box that yes, it's not just a complete waste of time. You do get an idea of what the market is. But in terms of, let's say, if they're trying to find about like a good client, like what to you makes a good client? What should like a real estate agent be looking for so they avoid, let's say, in the car industry, the tire kickers, or people just want to do like test drives and things like that. How do you know what are the good qualities you're looking for a good client?
The difference between an A client and a B or C client, as I would say in sort of sales parlance. I think when somebody is motivated, they provide information that's telling that they're ready to go. One, I need to move by this date. If they have a date in mind, they're motivated. Motivation takes a variety of forms. Another way to know that somebody is motivated is you can't you when you start the journey of buying a house, you have to have a mortgage pre-approval unless you're lucky enough to be able to purchase with cash, which is only 5 or 10% of the market, right? The vast majority of people need a mortgage. Before you can really look in earnest, it's very important to get a mortgage pre-qualification letter. This is a 10-minute, no obligation conversation with a lender or loan officer, where they're going to ask you a couple questions, do a soft pull on your credit, um, and basically determine what's affordable for you in a purchase. Where do you want your monthly payment to be? How much money do you want to put down for the property? By answering those questions, we can back into what an appropriate sale price is going to be for a home. So so meeting with a mortgage professional serves two purposes. It validates the range that the client is going to be looking at in terms of price, property, You don't want to go too high and stretch stretch unreasonably in your budget. You also don't want to go too low because you're going to end up looking at properties that are maybe not as nice as what you could afford reasonably. So it's important to bracket what's going to be appropriate for a price. And secondly, working with a lender is going to be a necessity when it's time to submit an offer. That offer requires that lender pre-approval along with the agreement of sale, seller's disclosure, et cetera. It's one of the cornerstones of an offer. No seller is going to accept your offer if you need a mortgage and you don't have a pre-qualification letter because they're like, how's this guy getting a girl? How's this family going to get a mortgage? So, how do I know that I'm working with somebody who's motivated and earnest when they have a pre-approval letter and they're ready to go? If they're dragging that out, oh, I'll talk to them next week. Oh, I'm too busy at work to really get to it. Then I know they're not serious, and I don't want to waste my time um, until they have that frank and candid conversation with a lender. Because look, looking at houses is lots of fun, right? That's kind of the sexy part. And, oh, look at this great family room, and oh, there's a pool, and great. But at the end of the day, it's the dollars that make the difference. And it's the ability to finance a transaction that determines whether that buyer is going to move forward or not. And having that information up front, how much can I afford? What's comfortable? What's a reach? Um, and having that relationship established with a lender is vital at the beginning of the process. So when I'm first working with buyers and they're telling me how gung ho they are, yet they're reluctant to sit down with a loan officer. That's a tell to me that they're really not serious because I give them that same explanation that we just talked about. I share the same thing with them because, hey, if this is a goal of yours, if you want to be in a new home in 2025, then these are the initial steps you need to take to get there. So those are some of the things that I know if a buyer is willing to do, they're worth my time. And if not, it's okay. When you're ready, we can have a frank conversation.
So it sounds like really, that it's the size of your purse. Before you go out buying, you need to know the size of your purse. That makes sense. And just to switch a little bit to another topic, Tom, just to ask you, imagine now we have another final person. Let's say that they know a little bit about real estate, but they're considering, maybe they're not an owner occupier, but they're considering maybe investing for the first time. Maybe they're buying their very first investment property. I know you've got some experience, your own ones, and being a landlord and doing some renovations. So what do you look for yourself when you're buying a property for investment, or how would you advise someone that's starting out? They come to you as a complete novice as a real estate investor.
Oh, this is a fun one. So real estate investing, it absolutely builds generational wealth, right? Investing in real estate pays you in so many different ways. It is one of the best ways to, in my opinion, to be financially secure. It's a wonderful, wonderful way to pay yourself forward, to make money today, make money for tomorrow. And I have several investments, real estate investments, and I've worked with plenty of clients who are real estate investors. I have several that I'm working with that, today. And the neat thing about investing in real estate, and I would say this parallels being a real estate agent also, is that there are a myriad different ways to do it and be successful. There's no one size fits all when you're investing. And people approach it very differently. There are some people who say, I want to be in the best neighborhood. And I want to be in, if it's in Philadelphia, I want to be on Rittenhouse Square, the best addresses in the city, because I know if I have a property there, it's never going to lose value. And that's very true. There are other people who say, it makes sense dollars wise for me. And I need to make sure that my cap rate, uh, my figure of my net operating income divided by my purchase price is a 7 or 8% return. And if my cap rate is a minimum, analytically, if my cap rate is a minimum, 6.5 or higher, then I know it's a good deal. And it can be anywhere. That property can be, in a bad neighborhood, good neighborhood, doesn't matter. So long as my cap rate is a minimum number, that works. So that works. Other people I know say, you know what, I want to be close to public transportation and a strong transportation network because I know that my tenant is most likely going to need to get to work. And so if I can be near a train line or, a major highway, then that's going to enable me to cast a wider net for potential tenants. And I have a good location in that respect. Still others They say, hey, I want to be near a college campus, or I want to be near a hospital because I'm going to attract medical residents or undergraduate students or graduate students. And so I'm going to have a steady inflow of tenants every year that, need a place to live. All of those I've seen work successfully. There's even more than that. And, certainly there's so many different ways that you can be a successful investor. And I'd say that if you're itching to kind of get started, you need to gravitate towards the way that makes the most sense for you. That is, if I'm an analytical type, then perhaps I'm looking at spreadsheets and my rate of return. My cap rate is primary in that respect. And I'm really analyzing what are the annual taxes, what's the annual debt service that I would see on a loan, and all those other details that really sort of distill down to what my internal rate of return is going to be after everything's factored in. For others, if you are, familiar with, you live nearby a specific university or college, maybe it makes the most sense then to invest there because you know the rhythms of that school, and you know that hey, there's plenty of new students that come into town every August. So I want to invest near Villanova, on the main line, or I want to be in West Philly by University of Pennsylvania or Drexel University, etc. Um, so I would say you gravitate towards what makes the most sense for you at the moment. That's like sort of the first step to sort of dip your toe in the water, right? Um, the other advice I would give with investing is beware of going too big on your first investment. What I mean is not, you're not looking to buy a building your first time around. You want to buy a duplex or a triplex, meaning a 2 unit or 3 unit property that's fairly modest in size. The reason is, even if it's brand new, your that first property, invariably things are going to go wrong. And you as the owner are going to have to figure out how to fix them. Either you're going to hire somebody, you're going to try to do it yourself. Maybe you have a property manager who's going to do it. It all costs money. And the larger your property, the physical plant, the larger that property, the bigger the cost is going to be to repair it. So for me, what works for me personally is a smaller property that's either a duplex or a triplex, even a fourplex, but not so unwieldy that if I got to replace a roof, I'm not like taking out a second mortgage to do it. That's important. Start, in a manageable size because the unexpected will happen, and you want to make sure that you're not buying something where just going to be writing big checks, week after week because the property was just too big and unmanageable.
That's so interesting because you really are so many different strokes for different folks, right? There's like a million ways of making $1 million in real estate. There's just so many things. And it's good, as you say, to not to start off with, because you hear the Grant Cardonis of the world with the big, massive complexes and such. But when you're starting off, as you say, you want to make mistakes in a small pool, in a small sandbox, and then learn from those mistakes maybe and go forward and say, okay, I know how to do that. Now I can magnify it. Because if you go big at the beginning, you're wiped out for what is it, like 7 years or something like that if it's bankruptcy.
Oh my goodness. Yeah. And bankruptcy haunts you, it doesn't go away easily. Eventually it goes away, but it really puts your life on pause for a while. And right, the Grant Cardones of the world have gotten there because they started small and they bought a couple duplexes and they bought maybe a fourplex and then they tried their hand at a 6 unit building and they stubbed their toe and they made a mistake and they regrouped from that and they said, okay, but if you're good at it, you can keep expanding. And next thing you know, you're looking at a 40 unit building or a 75 unit building, and you can really scale up. But everybody starts this way. They all start modestly because you have to understand how your balance sheet works, how your mortgage and debt service can work to finance a project, as well as to give you tax advantages, throughout the time of your ownership. So there's a lot to unpack there, and it doesn't happen overnight. You got to start slow and small and grow it in a manageable way.
Yeah, I love it. I mean, this whole kind of slow and steady, like don't buy the Lambo right now, don't jump into your 100 unit apartment starting off. And I guess talking about starting off, people, they're often waiting on the sidelines, right, to get started in real estate, or even my personal experience in the stock market. They're waiting around, they're waiting for the market to be at the bottom. For instance, in 2010, 11, 12, people were thinking that the real estate market was going to keep falling further. They were waiting for a bottom, and it's risen then for about a decade. It just kept going up and up and up. So what are some things, Tom, that you're seeing now, and what are some things that you're looking out for in the real estate market going forward?
Right. So, two thoughts. The first is, if you're on the fence, get off the fence, get into the market. Because the best thing going for you when you're either an owner occupier, you're going to buy your own home, or you're going to invest in your first property, the number one thing that is your friend is time, is how long you've held that property. So the market might not be ideal, but I guarantee you there's a good deal out there. And no deal is perfect, no houses or opportunity is perfect. But once you get an understanding of the market, you put your best foot forward and you make a go of it. You will see appreciation. You will see money in your pocket, but it's only if you start. If you keep delaying and saying, "Well, I'm going to wait for interest rates to come down a little more. I'm going to wait for the market to become more favorable," it doesn't happen. It just doesn't. If by luck, you catch a falling knife and you end up on the low point of an interest rate curve, great. But frankly, you will do far better by buying that property, taking a tax write off at the end of the year if it doesn't do so great, or refinancing 2 years later when interest rates finally do fall down, than by sitting on the sidelines. Because if you look at historically, real estate has only gone up. There might be a little dip here or there, but over time, real estate appreciates. And the earlier you get into the market, the more appreciation you will see. And it's that stepping stone of starting small, and then whether it's your own home, getting a modest home first, and then building on your equity, and then trading that in for something larger till you finally get your big house. That's the way that works. It doesn't happen overnight, and time is your friend. The later you start, the harder it is. So that's what I would say for people who are sort of thinking about it but a little unsure. Put your fear aside, take the plunge. You'll thank yourself later, and you will thank yourself. Um, the next part of your question was, where's the market today and sort of where's it going? So I think that the real estate market currently, we're at the tail end of 2024, and the real estate market uh, this year has been pretty lousy in the US. Interest rates were stubbornly high, which affects people's purchase power. And and prices were also high as a cause of the run up over the last couple of years. So you have this double edged lousy factor of prices being high, which is not affordable for a lot of buyers, and high interest rates, which make not only it more challenging for a buyer to finance their house they want, but it also makes it more challenging for sellers who are interested in entering the market, but the home they currently have has an interest rate that's much lower because they bought it 5 or 6 years ago and their interest rate is in the 2 or 3% range, and they're loath to sell that house and buy a current house because their interest rate is going to be double that, 6.5 or 7%. So it's a variety of factors that have sort of coalesced to make the real estate market unattractive right now. With that said, interest rates have slowly been coming down, and I think that the pressure of high prices is starting to abate because sellers are becoming more reasonable. And this is absolutely normal and typical in the way the real estate cycle works. When prices get too high, buyers had enough, they put their hands in their pockets, they don't buy. And they say it's too expensive for me. I can't get the house I want because the interest rate is making my payment too high. And we're just going to lump it and we're going to rent for another 6 months or a year, or we'll stay in our smaller house, and we have to. We just can't move forward. That inaction causes sellers who must sell, those who, it's not a discretionary sale for them. It's a necessary sale for them. It enables those sellers to say, okay, if we want to move on, we have to drop our sale price. We have to accept a lower price for our house. And when that happens, somebody goes in and buys it. And that causes the neighbor down the street to go, oh, so and so finally moved their house. They sold for less than they wanted to, but we need to follow suit. And the whole market corrects. So that's starting to happen. And I will say that, the 2024 presidential election was really a challenge this year in the real estate environment, because a lot of people, there was so much uncertainty with who was going to be elected. And this is not a political conversation. or a political commentary, except that everybody was uneasy about the election. It was charged, and it was a very challenging summer and fall where people didn't know what was going to happen, and that sort of environment really put a damper on the market. Nobody wanted to do anything. Typically, the real estate market in Philadelphia, you have two markets. You have a spring market, which is a little more dominant, runs February to mid June. Then the summer cools off, and then you have a secondary market, a fall market, which goes September to beginning of December. It's a little bit smaller than the spring market, but it's still very powerful. And a ton of buyers and sellers make deals happen in the fall. It's a great time to buy or sell a house. This fall, that didn't happen. The result of high interest rates and the looming election caused everybody to just sit on the fence. Nobody, because there was no confidence that, what's going to happen after the election. Now, the interesting thing is that literally a couple of days after the election happened, regardless of whether you were joyous or miserable, real estate started to move again because people said, well, at least we're past the uncertainty of who's going to win. Now that we know a choice has been made, we feel better about moving forward with our purchase. And the same thing would have happened if the other side had won. Doesn't matter who won, just that somebody did. And now we can move past this sort of political logjam. And so I feel like this fall, at least in the Philadelphia area, our fall market was compressed to about 3.5 weeks. And it started, the second week in November, right after the election, and it kind of stopped, in the last couple of weeks. And there was a period of about 3 weeks where it was just, it was really packed. And every day was, go, 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 go. Buyers and sellers both were eager to get things moving. So I feel like the whole fall market, instead of being a 3-month market, compressed to about a 3-week market. And now we're getting closer to the holidays, and the market will take a break before we recharge, and we're back at it in the spring. I will say this, Michael. I feel that 2025 will be a strong year in real estate. I feel like prices will continue to, or excuse me, interest rates will continue to ebb. I feel that the incoming administration, whether you agree with them or not, is going to be more rosy about the economy. And I think that the public perception is that there's going to be a better economy with a new administration. And so much of what drives the real estate market is consumer confidence. It's 85% of the equation. If a buyer feels confident that their job is secure, that their company that they work for or that they own is expanding, they are far more likely to reach in their pocket and write a check for a new home. If they feel that the winds of change are blowing and that there is real uncertainty in the air and they don't know if they're going to have a job in 6 months, they're not buying. They're going to make do with what they have, and they're just going to kind of delay that decision. Consumer confidence, whether it is in concert with reality or not, doesn't matter. If people are confident, they buy and sell. If they are concerned, they're not. And that it's like as black and white as that. After 34 years of seeing, the real estate market in action with a couple serious, ups and downs, consumer confidence drives the ship. It really does.
It's such a great piece of advice there, Tom, because it kind of, I can see how you're sort of saying it's a bit like the Nike sign, just do it, like just get started, in the beginning, like time in the market, better than timing the market, you just got to do it. And on the other side of the coin, this whole thing of the lock-in effect with the sellers, they don't want to, get into a new mortgage with a higher interest rate, the prices are high, but I think the key thing is really just that resolution of uncertainty, as you were saying, that was so high that it was instilling fear and pausing. And it doesn't matter, like politically it didn't matter. It was just more to do with the resolution of uncertainty. I saw it too in the exotic market with luxury watches, with exotic cars. There was like a freeze all summer long. And, it was just like that. And then it's starting to thaw out now, which is it's hopeful for the next year, for 2025. And so that's, Tom, I really think you've had great advice. I think people here can really benefit a lot from this. So I just wondered, where could people reach out to you if they wanted to contact you? Maybe they become a client of yours or find more information.
Sure. Always happy to help. I'll give you three ways to reach out to me. The first is my website, www.tomdilsheimer.com. TOMD like David, ILSHEIMER.com. That's one way. My phone number works for a call or a text, 610-389-1482. And then lastly, I'll give an email for old folks like me who still email, and that's tomdills@compass.com. TOMD like David, ILS at Compass, COMPASS.com.
Perfect. So guys, it'll be in the show notes. You'll see it down below. And again, Tom, thank you so much for your time. I really do appreciate it. So there you have it, folks. You know, real estate remains a great asset class to invest in for the long run. And if you found this valuable, please subscribe if you're not already a subscriber. I really appreciate it. It does help the algorithm too. And share with people that you know, so that this free personal finance and investing information can benefit a wide audience as possible, which of course is the goal of this channel, so that we can all achieve our personal financial and investing visions, so that we can all become the investing professor.